Hey, good morning, everybody. Welcome to the Bookmap All Markets Order Flow webinar here. My name is Bruce, and we're going to go through the live order flow in the markets. It's a shortened day here today,
We're going to go
so
through.
it's not going to be too much to look at here. I don't think. However, that's okay. I've got something I wanted to cover for this webinar in particular, which I think you might find rather interesting. Plus, I want to go over some of the market pulse user case scenarios that we've been looking at again and again, and finding some real value out of that. So general disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in here and take a look. Looking at the S&P E-mini. We can look at any market you guys like, so just let me know. Good morning, Alois. And over in Discord, good morning, Stan, and others. All right, well, let's just take a quick look at the order flow, and then I want to dive into something a little bit different today, since we have the shortened day and we're not looking for too much. But you can see the kind of overall trend here for 6 a.m. On down to the cash open here 9:30 to now 10 a.m. The market has been kind of trending down, but look at what's happening here now at the open. This is where everything changes. You can see the change in the volume right here. You see the change in the size of the volume dots in Bookmap. And this is every day when the market is open. We see this kind of big shift and change. We can also see some data here that came out at 9:45 East Coast time, and how they really pull all that liquidity. This can give us so much insight, though. Okay, let's just take a look at this here and understand what's going on. And this will get into the discussion we're going to have on the markets today as well. So you can see the pulling of liquidity in here before the event, and 9:45 is right in here. And you can see that they're pulling before because they don't know. People don't know what the number is going to be. This guy up here clearly did not pull, or these traders up at this price level of 45.69, and they stayed in the order book. Okay, you can also see these other, partially pulled orders up in these areas as well. And then down here, well, where do you see it? I mean, there's kind of partially staying in some of these areas here after pulling just the 30 or 40 seconds before the event. All right, so anyway, the important part to understand here is that if the buyers want to meet the sellers, this is where they are. And look how we traded up into this area now and punched through it. And this is where the market is currently. Okay, this is not coincidence, right? We can look at this now for today and understand this area in here as being important for the activity, for the here and now. It's a swing up here as well. We see the this swing up in this area here is a little bit higher, but the liquidity that we're talking about that stayed in here at this 69 level is a little bit below the swing. And that's what we want to understand, is this context. Right? So you can see this guy at 69 actually pulled that liquidity, but there is other liquidity getting filled in these areas, and this is a punch through that area and that swing. Okay? So for all sorts of reasons in here, now we're starting to understand at a deeper level that this level here in price is important. We look at the stop run above that area here. There are stops and icebergs in here. Look at the iceberg transactions also in here, and that relationship between larger players using iceberg orders, and smaller retail traders using stops and getting stopped out here. Right, so we have a lot of things to kind of consider at this price level in here. And we're trying to get an answer here as well, and we're starting to get it right now. We don't know here as it chops around, but now look at the sellers come in, look at the order book, looking for sellers to drop it into 67 and then 66. Okay, just by understanding this context here, right? And we're almost at 66 right now. Okay, so this is how you can start to read and understand order flow. Okay, but right when we were mentioning that, it had not even gone to 67 yet. Okay, it has now, but we didn't really know until we got an answer here by the participants in the order book as well as in the transactions here. That sets us up nicely for what we're going to cover today. Okay, so let me just pose the question out there. How many of you have heard of first principles, design by first principles? Don't have the Indian market up, so sorry about that. Yeah, I don't actually look at it during this period. Okay, it's closed anyway, right? So there's nothing really we can do there. So good morning, Stephen. Yes, Elon Musk talks about first principles, exactly. Now, you know, it was Aristotle that began with this idea or concept of breaking things down into understanding the essence behind the thing that you're studying. And this is, was it Plato? I thought it was Aristotle. But this is the important element here. That you're really trying to simplify, breaking it down into the first kind of elements of what's behind something. And we can do that here with the markets. And why this is so valuable and why someone like Musk or others use first principles is because, first off, it allows you to understand this and come up with your own ideas instead of using someone else's. So let's go through an example. A lot of us, when we first get into trading, we're reading books or, you know, watching videos. And understanding the markets by what? Candlesticks. Understanding patterns. That's like the ABCs, like, you know, a head and shoulders pattern, a flag pattern. We'll get to why I went through a flag pattern in our strategies and setups area, but in just a minute. But these kinds of patterns and these ideas in here, that's from someone else. You haven't really looked at the market, and you really haven't broken it down yourself. So you're not thinking for yourself. You're learning by analogy. You're learning from others. And that might be wrong, might be a wrong assumption. We don't know, but it might be. Okay, so going through and understanding something by first principles, you are getting to the essence and the core of it, and then trying to get an answer for that. And we're going to go through that process here in just a second, okay, with the markets. Before we do that, I want to show you guys the Black Friday. So hope everyone had a good Thanksgiving, but I want to show you guys this for the Black Friday sale that we're having here. If you want to try Bookmap, this is the time to give it a shot. It's at a really great discount here. There's two different offers here, and I can explain them. So, you know, we get a question all the time: are there any specials? You know, what's offered? Well, here it is. You know, so I get this question all the time: are any specials? I'd like to try Bookmap. And we do this, we've done this now a few years in a row. So this is the opportunity. Jump in, try it out, check it out. And it's only running November 23rd to the 28th. So that'll be on Tuesday, it'll end. Okay, so it started on Thursday here on Thanksgiving, and we're running through the 28th. Here are the two deals that you can get. This one here is 50% off. It's for 3 months. This is a really nice deal. This is available to anyone who's new to Bookmap, any of the digital free version users, as well as current Bookmap monthly subscribers. So you might be subscribing monthly right now. If you want to get a discount, get it for 3 months here, 50% off. So go check it out. If you are new to Bookmap, and the first month you can get 60% off here. Now this is kind of interesting too. So this is open to people who are new to Bookmap here, or as well are free digital users or previous Bookmap subscribers. So if you had Bookmap, I don't know what the cutoff period was, like let's say a couple of years ago, and you tried it out and you're kind of coming back and finding it interesting, then go for this deal here. 60% off for the first month. Give it a try. See what you think. See how you like it. Now, that's just the overall here. If we click on grab the deal, okay, here are some of the details. Okay, the exclusive 50% off deal. This is the 3 months here for the current monthly subscribers, for the free users, and also brand new users here. This is where you click and go through the process. All right, and then for the ones that want the 60% off, that's this one here. Refers to this 50% here. This one here, the 60%, scroll down to the next one, refers to this area here. Okay, for anyone that has the is new to Bookmap or previous subscriber and want the monthly 60% off deal, you'll need to put in this coupon code here, 60% off. All right, so just read through it. It's pretty straightforward, and there's FAQs here down below. Okay, so anyway, go for the deal. If you've been kind of hemming and hawing and in our Discord and been checking out some of the things, another thing that you can do as well is partake in the Bookmap Academy. Okay, so for example, we had a great Academy meeting last Wednesday, just a couple days ago, and if you're interested in the Academy, well, then you have to subscribe to Bookmap first. You have to have Bookmap, right? So click on the More button here and go to this Bookmap Academy and read through this in here. You can apply here. It'll take you down the screen and just enter your credentials in here, or your information in here. There's FAQs below as well. All right. So, and why I'm bringing that up here is because if we take a look here at some of the live videos that we had, here's our Bookmap Academy coaching. We had a great session in here, so you might want to check this out and get feedback. We open the mic up and get feedback directly from Bookmap coaches, get mentored here, and you can work your way up to getting Bookmap for free in step 2 here in the Bookmap Academy. You'll start by applying for the Junior Academy, and then if you're accepted, then you'll join the Junior Academy, and that's kind of a testing ground. All right, so anyway, just you got to have Bookmap, so if you're interested in that Academy. So get the deal right now from Bookmap, get the 50% off or 60% off, and you can join the Academy as well. All right, anyway, let's get back to these first principles and understand. We're going to start with a big question here. We're not going to start with indicators, and we're not going to start with candlesticks and patterns and any of that at all. We don't want to cover any of that. We want to understand what makes up the market. Okay, how does it trade? what makes price move? These are some of the very basic questions that we first want to tackle, understanding the first principles. Okay, and then we'll get into also trading. So let's close up the indicator panel here in Bookmap, and then let's take I'll take also off the absorption indicator here. Okay, and let's answer that question. Okay, so what makes up the market? What do you guys think? What is within this structure of a market? Buyers and sellers, right? That's true. But what exactly? How are buyers and sellers participating? Exactly, passive or active. Buy stops, sell stops. Well, stops is just one. But what you guys are getting at is precisely the answer. It's orders. The market is made up of orders. We're really diving down and getting into, like, the binary elements behind the market. Without orders, there isn't a market, right? So both of you guys are correct, Stephen and RJ. So this is what makes up the market. And then there has to be an activity too. One has to buy from another or sell to another. Okay, so there has to be some sort of matching engine in here as well. This is what makes up the market. Okay? And you've probably heard a lot of people, especially a lot of auction market theory, volume profile type of guys talk about this as an auction. Well, that is precisely what it is. Okay, it is actually a two-way auction, because if you look at an auction for, let's say, like a classic would be like a painting or something, like or a car, or whatever it is, some sort of object in an auction at Christie's, or whatever it is that you see on TV all the time, or movies, raising the paddle and saying, I'm bidding on this, and etc. Well, so that's a one-way auction. Okay, they're bidding on one object or one thing, and this is a two-way auction here. Okay, because you also have the let's say the artwork. They're able to reply back and be able to say, like, yes, no, I'm not going to take that, or I will take your offer, or I don't want to take your offer. So there's back and forth on both sides, right? So it's a two-way auction, and it's just buying and selling. Very, very simply, the limit orders, what you see here in the heat map or in your COB column here, is the limit sell orders above the market and limit buy orders down below. So these are players or participants in the auction, and they are bidding at these levels down here below price, and they are offering up here. They are willing to sell up at these prices. So someone says, yeah, I will sell to you, but it has to be up at this level at 69 up here, and then I will sell to you. Okay, now these markets, especially something like the S&P, they're incredible markets. There are so many different players in here, and they're doing so many different things, and we can get into the complexity about the algos and the bots and all these different things. It doesn't matter, though. First principles, it's an actor in the market, an actor in the auction. No matter who they are, okay, it might be a real person or it might be an algo. And it is this auction here that is the central theme. Okay, so if we take a look at this in here, and start to understand and break it down more. So who's going to take the this seller on? Like let's suppose this market right here, and let me just stop it for a minute here. I'll just kind of scroll back a little bit. Let's suppose this is the only area of liquidity. Can make it a little starker here. Let's suppose there's no liquidity in here. All of this and what you see in here, it does not exist, right? You only see it up here and liquidity, 171 contracts up here. Okay, there's no market in here at all for any of these other prices because no one is willing to sell to you at those prices. They will only sell to you here. So if you want to buy, you have to buy up here. This is the price they are willing to sell. Okay, this sounds simple, but this is how the markets work, and then you can really start to understand now. Well, spread change or volatility, lots of different things. A lack of liquidity in the market. Why are you getting stopped out easily in some areas, or why do you see a spread change and you get horrible prices, etc.? We're starting to answer that question by just understanding some of these very, very core principles, first principles in the market, right? So that would be the auction. So if I'm down here, the last transaction was at this price right here with the red rectangle, 45.65 and a quarter, and I want to be a buyer, and there's no liquidity in here, where am I going to get filled? What do you think? I know it's a simple question. Morning, trading for a living. No answer. Okay. Well, you're going to get filled up here. This is where the sellers are. As simple as that. So you're going to get slipped one full S&P point and 3/4. Okay, so almost 2 full points you're going to get slipped, and you're going to get filled up here, and you're going to be already. Let's suppose it trades up here immediately, and then no one else is willing to buy up here, and the next transaction takes place by a seller hitting the bid at 65. You're going to be down immediately 2 points. Okay, and each tick in here is 12.5 bucks. So you're going to be down $100. Okay, already, right? $50 a point. So that's how markets work. That's how the auction process works. Okay, now these markets, like I said, are amazing. Over the years, like that, back in the pits in the days like before electronic markets, you would have big spreads like this. You would have floor traders scalp the market. They would do this all day long. They would say, like, I'll sell to you up here, and then they buy it back down here, and they do that all day long, right? And they're just making like maybe a few ticks or maybe a few points. Depends on the market. Those days are gone, more or less, because look at how tight the market is. Okay? Every single price, well, the S&P at least, every single E-mini product here, every single price has liquidity. Okay? Players are doing all sorts of things in here. And this is really nice for us because there's so much liquidity in here. You're going to get filled in some place, one or the other places on the bid or the offer. It is one tick wide. That's it. Okay, so fantastic liquidity, fantastic market. We can jump over to crypto. Now, crypto is a little different. And in fact, I don't think I'll be able to show it here. Yeah, maybe we won't we'll stay away from crypto right now. But some of the we just traded up into high liquidity up in here, so interesting stuff, and you see it immediately sell off. This gets back to the first principles that will once we get down to understanding what makes the market move, we'll get into higher time frame stuff. Okay, so anyway, the getting into back to the first principles, we can understand that there's two sides to the trade. We have the limit buy and sell orders, and we have the aggressors in here that will trade at market price. Okay, so they'll say like, well, this is where, here, let's just move in here. This is where people are providing liquidity at 45.65. There's 67 contracts here, okay? And there's 52 willing sellers up here at 65.25. Okay, so if I want in to this market and I'm willing to pay up a tick, a quarter point, this is where I'm going to get filled. Okay, I'm willing to get in. I want to be in now. And that's the aggressor part, because you're not providing liquidity. You are taking liquidity off of here, and you would then trade with these traders here. And if you just hit, it was, let's suppose it was 10 contracts, right? Well, then you would take 10 of these contracts of the 52, and you'd have 42 left at this price level, and that's it. The contract or the transaction was done, and you'll see a green dot in here, and that would be your trade. As simple as that. And then if it trades right back here to 65, someone sells, hits market sell because they could. The spread is here. Well, then you're going to be down a tick. And yeah, you'll be down $12.50, or you'll be down, if it was 10 contracts, you'd be down $125. So immediately. So anyway, if we're starting to break down and look at the market in terms of first principles here, we're starting to understand now what the market is made up of, and we're also starting to understand what is making this market move. Okay, so the market is made up of orders, of participants. There has to be participants in a market, else it's what they say, there is no market for something. And you might come up with a product, just like the S&P here is a product. You come up with a product and no one wants to trade it. Well, there's no market for it because no one wants to trade it. You can talk to guys that back during the financial crisis. A lot of the institutional traders, there's no bid. No one wants to trade. There's too much risk. They don't even know what they're buying. So there's no market. The markets are dead. There's no liquidity. And there's no transactions. So yeah, very, very interesting time. Anyway, by understanding the orders, we're starting to understand now price movement and what makes price move. Right? So, and it moves by a tick, or it moves by where the liquidity is provided. Right? So, if, for example, let's suppose that you have here more than 58 contracts that you wanted. Oh, I'm sorry. That was last transaction. Yeah. So let's suppose here at the best offer here, there's 58 contracts there. Let's just move in a little bit. Okay. So here at the best offer, there's 61 contracts. All right. Last transaction, there was just one transaction here. You can see it here. The little green one means the last transaction. And there's 61 contracts here. 61 contracts of liquidity. Now, if I come into the market and I have 62 contracts that I want to trade, I will take all of this liquidity here and I will move price up to this next level here. And that's what makes price move. It has taken all this liquidity here and has moved up one tick to here. And this 77 here would now say 76. Because I also, my 62, 61 were traded here, and the next one was traded here because I hit market buy. I want in right now. Give me what is available. And and you have now moved price one tick. Okay, and in fact, you've kind of moved it against yourself because now you're probably down. Well, you're down 100. I don't know how much. You're down a tick on your 61 contracts here, and then you're at the best offer and current price with which you have 0 on, with your one lot up here. Okay, so you're immediately down if you did that. Okay, so but we're understanding now what makes the market move, because a lot of times you hear like, well, what do you mean there's more buyers than sellers? That's impossible. It's true. There cannot be more buyers than sellers. There's a matching engine. For each buyer, there must be a seller, and vice versa. Okay? If there are more aggressive buyers than passive orders, then the market will still match with each one, but price will start to move up. If there are more aggressive or market sell orders than there are limit buy orders, then the market will move down. Okay, so I know this sounds really simple, but we're starting with first principles, and where we're going with this is understanding the market at a much deeper level, and we're starting to understand moves at a much deeper level now. Thanks, Stephen. Yeah, the educational center or the learning center explains these things as well. So let me show you that. If we go to bookmap.com, okay, and then you click on the more button here, and you go to the learning center. Okay, so this is a good review of it and this market mechanics course that we put together a while ago. This is still it's evergreen content, so don't be turned off by the maybe the user. It's where this aggressor, the interface in here is from the older version of Bookmap that shows the black and white heat map, right? But we're going through the same things in here, and in fact we have illustrations that show you what happens if you do a certain thing. Okay, and market buy at 1, volume of 1 in here, and what exactly happens and moves price. Okay, so I would encourage you guys to go and check out that course. So go to the Learning Center and then go to the Market Mechanics course, and at least check out part 1 here. Okay, we're doing basically the same thing in here. We're going into the first principles though and leaning on that. And what we want to do is extrapolate that and unpack it and understand it at a much, much higher level. Okay, because if we can start to understand now moves in here, very, very basic moves like we were just talking about, we can start to understand some of the previous activity in here and the participants, and start to understand that there are more aggressive sellers in here that are moving price down. If that is the case, so we can see that in here, right? Look at the sellers. Here are the buyers, green dots, market buyers. Sellers, some buyers in here, a little bit more able to move price up back to here. And then look at the auction back and forth in here. Right? There's more sellers here. So when I say more sellers, there's more aggressive sellers in here compared to aggressive buyers. Right? we're not talking about liquidity at the moment. We're just talking about the transactions, which are the volume dots. All right, so now these are the ones that move price, though. We know that. So if we see that there are more sellers in here, then we're looking for sellers to potentially, if they take all the liquidity here, 39 contracts, they will move price to the next level and maybe the next level. Okay, so and by looking at this right here, right now, I would look for price to come to the next tick and then also this liquidity here at 64.5. Okay, well, let's scroll forward and see. There we go. It's already moving down. Okay, buyers come back, but look at the selling again. Buyers come back. Buyers starting to move it away here. Okay, now I haven't seen this price action. I don't know what happens next, but this is why we go through a couple scenarios during these market webinars and the All Markets webinar. And we go through a scenario. We are still looking for sellers to auction down into these areas in this liquidity. We had a move back up here. And we're still looking for that, though. Okay? There's more sellers than there are buyers. Okay? And then here we get our move, right? And it's traded into 64.5. Do you understand, Stephen? This is really starting to understand, what makes this market move, and understand these first principles in here, from auction and orders, from orders to auction to price movement. Right, so we traded down here. Now, what I talked about earlier was also another thing, and we're still getting into first principles still, but we're understanding that at a little bit deeper level and going through different scenarios in here. The scenario is that there are more sellers in these areas here. Okay, no question. So we're looking for a price to go and test this liquidity, and it did. Right. So, however, we can also start to understand. Yes, there's more. Tapesh, there is more selling pressure. Yes, there is more aggressors selling than there are limit buy orders. So they are able to move price, as we said. Okay, and then test into or trade into where they can find more buyers, and that is here in the heat map at 64.5, right here. Okay, 171 contracts. Look at the bump up in the order book in here. We talk about order book skew all the time. There is a skew in this book here. There are more on the bid here compared to these areas up in here. Right? So the question is, in here, are there enough sellers to trade into this area here and take all that liquidity and trade through it? So is there more aggressive selling pressure? At this point here, in this view, we do not see more sellers. We see that there's actually more buyers here, and they completely absorb the selling pressure. How much traded? 31 contracts. It's right here in front of us. Okay. And again, we're really, getting into these first principles. And we're understanding these basic market mechanics here. And this is what moves the market. Now, where I wanted to go through, and we just defined also another key concept in here, absorption. Okay, there are more limit buy orders here than there are market sell orders or selling pressure. All right, so we can go through another scenario now. Is if they're auctioning into here and trading into this limit buy or these limit buy orders in here, but they cannot trade through it. The second scenario that we go through is, well, maybe there's no market down here anymore. No one's willing to trade with these guys at 64.5. There's too many buyers. So the market auctions back up, and now we can look at maybe the limit or the market buy orders in here, okay? And this relationship with the liquidity, the limit sell orders. So the scenario is in here, if there are more market buy orders in here, and they're going to test back up into these ranges up here where it traded previously, we can see price move away from this whole area here. We talk about trapped volume a lot. In fact, we look for it in a high probability setup. And this is starting to get now a little bit, further into it, and we're kind of moving away from first principles. But we're basing our knowledge off of these first principles. And our knowledge would be an assumption that all of these sellers in here, they're participating in the market. They will need to be buyers to cover as price moves against them. Okay, now we don't know if these sellers in here are exiting the market or entering. Are they entering short or are they exiting? But when we talk about trap volume, we look at all of these transactions in here, and we look for a squeeze that these sellers in here got it wrong. They can't get through this liquidity here, these buyers. So we look for an auction up here, okay? And we don't have too much right now in this view. There's some transactions up in here, but not many, right? 170 compared to 800 right below it. Almost more than 4 times more just below it here. And that's just one tick, okay? So the scenario is, and understanding the trapped volume or trapped traders would be these sellers who can't trade through this level of 64.5. They were completely absorbed here. So the scenario is, if we can auction up here and find buyers, and we're looking for a lot of buyers, okay, like we were looking for a lot of sellers in here. Now we're looking for a lot of buyers up here at 65.75. If we get enough, then we're looking for price to move and trade up into this liquidity at 66 and onwards to the upside here. Right? So are you guys finding this interesting, or just a little bit of feedback? Over in YouTube, if you can give me some feedback, just hit the thumbs up button there. Give me a like on this. It'd be interesting to see what you feel about this. And I mean, I can just say what we're doing on by design in here, because we know it's a short day, is to go over first principles instead of by analogy and getting all confused with data from candlestick charts. Okay, the comparison here would be by analogy, like, oh, okay, well, someone says, this is a breakout and this is what it looks like, but you don't understand why. And they'll say, oh, you should trade, the breakout and or look for a pullback, to some of these little areas, and then trade it back into the mean, or look for extension, etc. Whatever the strategy might be. But now you're going by someone else's advice or analogy, and this is not good. This is why you really don't want to take. I mean, it's good to learn from others for sure. Okay? But here you're learning and digging into it for yourself, and you're going to come up with your own ideas, and you're going to be able to use those ideas to bounce it off of maybe other people's advice or other people's insights. Okay, instead of going by analogy and accepting their insights on the market. Right? So when we really boil it down, we're really starting to understand now what we're looking for. And that's how you can start to develop your own way of trading and your own setup. So Now there's two things you can do up here. If we get our buyers and it auctions up here, then we're looking for this to go higher, okay? Because we know that these traders in here are selling, and they will have to be buyers, and that's an assumption, but it is based off of first principles. If you are selling in here, your position now is a buyer. You are now a buyer in this market. Okay? Vice versa, if you are a buyer in a market, you are now, your next action is to sell. And then it's a question of where are you going to sell? Okay? Market makers and professional traders, you hear about stop runs and really kind of nasty activity, just annihilating the retail traders. Well, but it's pretty simple. If there are a lot of sellers in here and you know that they have to cover and they have to be a buyer now, where are they likely to buy? And if you can move the market in that way, well, then you've got an edge over them. Okay, so we look for the potential of buyers up here to squeeze these sellers, and we look for the stop run. We look for high liquidity. The high liquidity is up here at 76.5, etc. Going through these different market scenarios here, how they may play based off of the first principles. So in here, look what's happening up here, and we start to judge the auction, and we start to understand what's going on up in these areas. How much did it trade up here? How much interest is there in trading up here? Not too much right now. Okay, we don't see a lot of transactions up here. Okay, in fact, in here, once, twice, thrice, it traded up, or the best offer was up here, but not one transaction took place. The last transaction was here, and it was a little 2-lot up here. And that's it. So it is exhausting out. It is telling us here at this time right now that there is no market here. There's no one willing to transact up here. The best offers up here. If you want to be a buyer, this is where you got to transact at this price level. Okay, so and no one is buying up here. Okay, there's liquidity, it's here, but do you want it? Do you want to buy? Do you want to transact with these 70 contracts up here? And we're getting our answer right now, no. Okay, so we're looking for a couple scenarios in here. Are we looking for our trap sellers in this big range in here to be squeezed by buyers? Well, then we need to see buyers up here at 65 3/4. If we get buyers up in here, we're looking for the move higher, okay, because they will have to be compelled to buy back, okay, because they're at a loss and they want to minimize losing. Now, the opposite scenario here is what if we get sellers transacting back here at 65 1/4 or 65? Okay, and because there's no market up here. But if we need to see transactions in here, that there is an auction going on here, and people are participating in it. We get our sellers in here, that's when we can look for the test back down to 64.5. So no buyers, some selling, not bad. Okay, a little back and forth here, selling. All right, let's see now. Sellers should be able to drop it. No. Back and forth, back and forth. Now we are looking at, like, this is 10 seconds of data here, right? Between 10:28 and 50 seconds to 10:29. Okay, so back and forth, really not seeing anything. We're also really not seeing any big buying here or really any big selling. And that is a clue or a tip-off in here. If we had a lot more selling in here, and I thought this was probably enough in here to get it back down to 64.5. We don't have any buying up here. And then it just kind of went back and forth. However, look at this retest back up here. So once, twice, thrice, fourth time up here, no one. and we're finding sellers again. Okay, so on this time frame, I would look for the sellers to try to drop it into 64.5. And it's still just back and forth in here. Now, some did actually now we have 10 contracts up here that transacted in this little range. Okay, so it's getting interesting, or a little more interesting. And these guys are now pulling their liquidity. And nothing happens here. Nothing. Okay, I gotta see. All right, so our second scenario is now starting to play out. We're getting buyers up here now, more significant buyers up in here. Okay, so now we're going through our second scenario, and we're looking for the buyers to try to trade up into 60, this liquidity up here at 67.5. Okay. Okay, and that's the move that starts to unfold here. Okay, do we get anything that transacted up there? No, they didn't even trade that. Okay, but it came one tick shy of it. Anyway, is it kind of clear how we're coming up with these scenarios? Starting to understand, and this is actually kind of nice in here what we're seeing. We see this all the time. And we'll go over this and understand this move here as well. Okay, but in this little auction back and forth in here, we're trying to gauge and understand the supply and the demand of the orders and these participants' actions. Right, so now, and because we did not, at first we saw all this exhaustion, we're looking for sellers and we're looking for them to drop price. Here's where we see the shift and the change in here. And guys, as you guys know that participate in these webinars, we talk about this all the time, and we see this shift and that change. And then we're looking for, back up into swings or liquidity. First one is actually up here now. Now that we zoom out, we have a little more information. We would look for that first test to be here, the second one to be in this liquidity up here. Right, so now look at what we just covered. Right, and like I said, I don't know what has unfolded here because I haven't even looked. So and Rob, this is actually one of the things that you've looked at a lot in here. Okay, so actually let me clear the drawings. Okay, and let's look at what we were just studying with first principles. We were studying this range in here. And we saw the exhaustion in here. And we're going through the two scenarios. Is it going to be buyers or sellers that break the level? Well, we got our answer. It was buyers, and they went right to where we were thinking they may go, because that's where the sellers are. Now look at this little range in here though, and we can draw a line across that. And again, we're starting to understand via the first principles why the market came back and tested here, and is kind of looking for sellers in here. Found a few, just not enough to drop it back down and auction back down into this area here. Right, so if it cannot, and we start to find buyers back in here again, we're looking for the price to move up to meet the higher liquidity up here. All right, so anyway guys, perhaps this is boring for you. I don't know. There's, like I said, we thought we'd take this opportunity because there's not a whole lot of price action going in here. Well, I was not anticipating a lot being at a half day in here. And in the US, a lot of people are going to be off, right? But I wanted to cover this and talk about market mechanics and first principles, and use that as the vehicle to understand the market mechanics. Okay, because this is really what moves the market. And now we're starting to extrapolate that into bigger moves. Rob, this is one of the things that you've noticed again and again and again. the move back down after a breakout, a pullback, to test not only where it broke out from, but also there's going to be a lot of transactions in here. Okay, in fact, let's just zoom into here, and we can now start to look at this little range in here. And where did most transactions take place? Clearly, right here. Okay, at 65.5. This is your high volume node. This is your POC. All this means in here is that this is the most traded level. And that means that most people agree with this price. Okay, so, and that's just fact. So the market can come back and retest this area to see if they're, maybe this is overvalued up here. Maybe these buyers a lot of people think they're crazy. I'm not going to buy it up there. Like, there's no way. That's just overvalued. In fact, maybe I'll sell it back to here to value. And there's your mean reversion trade. Okay, back to an average or kind of average price in here. That would be your high volume node. Okay, so let's take a look. We said 65.5, and it went one tick below that. We see some selling in here, okay, but not enough. Not enough. Selling in here, and now we're looking to see now, well, if the market if the market does not accept in here any longer, and we're not seeing a lot of transactions in here at this price level. So if we're not seeing a lot of transactions like we did previously in here, maybe the assumption is value's at a different level now. Right? So maybe it's up here. That there's another high volume node. Okay, so it's up here now, potentially. Okay, or maybe up in here as well. We don't see a high volume node, but we see some pretty big transactions. Okay? We know the liquidity's up here. We do not, on the retest here, we do not see a whole lot of transactions in here. Okay, so the assumption would be that price will probably not accept back down here. It tested, it traded, okay, but it is likely to go back up and to trade into these areas here. Yeah, because there's not a whole lot. In fact, this is what we call a low volume pullback. Okay, and you can see it here. Also in the volume bars here. Okay, so there's not a whole lot of selling in here, and if the market is not, we don't find the sellers down here and it cannot trade back down in here a lot, we're going to look for, this would be buyers would look for taking it back into an area where it can facilitate trade. Okay, so we'd look for the move back up. Okay, and beautiful move up into the liquidity we are looking for. Right. So this process and this understanding is now of the first principles in understanding the market is made up of orders, and it is an auction, a two-way auction, and that also this is the movement of the market depends on more buyers than sellers, or more aggressive buyers than sellers, I should say, or more aggressive sellers than buyers. Okay, that take all of the liquidity at one price level and can trade to the next level. Right, so now we're starting to understand the different participants and what their actions might be, and we're starting to understand these price structures as well. Okay, so price structures is a little different than market mechanics. It's the market mechanics that make up the price structures. Okay, so And there's so much. I mean, like, this is what we've covered so far is just the very, very small tip of the iceberg. However, for those of you who know your market profile, or your auction market theory, or your patterns, or your price action and structure, you can see, like, now we can start to understand all of it behind it, all of what makes up this, and it's really quite profound. What you can derive from what we've just covered. And we can look at now bigger moves though as well. We can look at the same principles, okay, from that binary kind of market mechanics. We extrapolated into a smaller move. Okay, we can zoom out more, okay, and we can look at bigger moves. And we're looking at and going through the same exact process based off of first principles. Okay, I am convinced that this is like this order flow that we're talking about, and the these first principles here on the market mechanics work on all time frames. I'm convinced about it. Like, it works on the daily chart. It works on the monthly chart. We can look at weekly bars in here. It is the same process. Okay, so it's and where this becomes like it is these principles behind what I think are derivatives of that is candlestick patterns, or volume profile, or whatever it might be. But is based off of these first principles in understanding the auction. And then you can derive or get into the details on the higher time frames as well, and understand these same principles. Okay, so on the daily, we're not seeing a whole lot to cover here. I mean, we've covered all of this move in here, which was great. We can look at today's action in here, and look at this auction in here, and this back and forth. Right? Well, it's just in this kind of big trading range. From down here, 62 and a half or something, on up to here at 71. Okay, so like a 10-point range or so. And we're seeing this back and forth in here, and we don't see, and we see every time it comes back down here so far, we're seeing that there's buyers that were willing to buy at this end of the range in here and trade it back up into the middle or the other side. Every time that we've seen sellers come in, they've been up in these wicks up in here. Now, we can take the same ideas in here and look at what's currently happening. Okay, so let's just go through the process, because I'm looking for sellers to retest it back down here. Right? And we're going to look at Bookmap to understand that, because we're only looking at the higher time frame here, and there's so much missing from here. We don't know. But what we do know by looking at these candles in here was the range was up in here. Now it's tighter, and it's smaller down here. It hasn't gone up to these highs before. And we're still seeing currently right now, we're seeing some selling coming in. Okay, we traded back down here, as you guys can see on this 15-minute chart, and we've come back up into the range again. Okay, so I'm looking for sellers though, because they seem to be less buyers willing to trade it back up into these previous areas in here. So I'm actually looking for sellers down here again to trade it back down to the bottom of the range. So we're trading from the inside out, and we're looking for sellers to move price to test this area down here. That's it. Now that's just one scenario. Now look what's happening. It's starting to go into a green candle now. Well, it's just kind of flipping in here. So, well, then if we don't find sellers here willing to take this back down, then I'm curious, we're going to have to find a lot of buyers up here at this 68 level, let's say 67.5 to 68, somewhere around in here. And we're going to have to find a lot of buyers in here to lift it back up and retest these areas. Okay, so let's look at Bookmap. Right, so anyway, the point was you can use these same principles on much higher time frames, and it is exactly the same. It is still an auction, and they're still based on the orders and the participants in that auction. It's just a higher time frame. All right, so now we can also look into a few different things now and start to understand, based off of the first principles, this context that we were talking about earlier, this context between buyers and sellers and going through these scenarios. So so where are the majority of the sellers willing to deal in this market? Well, they're up here. This is the liquidity, the majority of them. The heat map very nicely shows that in Bookmap. The question is, we know what makes price move is the aggressors. Okay, they take the liquidity, and if they take enough liquidity by buying, they'll move to the next price level and start to transact into that liquidity. Okay, so we're looking up and trying to understand up in here, do we have enough buyers to be able to break this range here and trade up into these areas here? And this is where we start to understand skew in the order book that we've talked about for years. Okay, look at the order book in here and look at the liquidity in here in the heat map. Okay, it's kind of, you know, back and forth. I mean, there seem to be more sellers up in here for sure. But it's not orange or yellow or red. And they keep adding and pulling too. You see the changes in the heat map. And then we haven't found the buyers yet. Enough buyers. Look at the previous behavior in here. And do we see like big green dots willing to lift this market higher? Not yet. Okay, not at all. So then are we going to find sellers in here? We'll come up, retest this area, and this is just price is too high. And I want to be very careful here about this, because price too high in an auction, we're going to get a lot of insight, and not just say that price has come up into these areas and tested. We want to understand the context in the order flow to give us the insight. Okay, because that's what will give us value here from Bookmap. All right, so the context would be, is there more supply up here with limit sell orders? And what is the relationship between that and the market buy orders? Like before here, we said that there's a lot of liquidity down here. There was complete absorption, I guess right in this area here, right? Complete absorption. I can't recall if it was this area or somewhere else, but like they were not able to trade through this liquidity here. Okay, so we got our answer. That is the context here that we're talking about. It was completely absorbed. So at the top, at these ranges up in here in current price, we're looking for that context as well. Is there a lot of supply with limit sell orders? Or are we finding a lot of aggressive market buy orders willing to trade and be attracted to that liquidity, wanting to transact into it? And so far, I don't see a whole lot of buyers interested in it. I see some selling and some back and forth in here. And I really I don't have much of an opinion on that. And I hate to use the word opinion, but like um, it's factual. I mean, we don't see market buy orders in here. Okay? Now we're starting to see some here, but also the liquidity has stepped up here. So does someone want to make the deal here? Do buyers want to transact into this liquidity? Okay, they do. Getting our answer, right? But there's still more liquidity up here. Do we really see buyers really interested? No, not yet. We may. Now, if we don't though, and we start to see sellers here at this 67.25, then I'm looking for it to trade back down into where it can transact, which would be a previous value area. And maybe to even the other side here. Okay, because look at the little step off from here at 65. 8, almost 9,000 here, and then almost 6,000 just below it. So 3,000 less. So this would be a good area for it to trade to, and looking for now sellers to trade it back to those areas. Now we can start to gauge and understand also the context of the aggressive sellers. Do we see a lot of that? A little bit, not much though, not much. Okay, so we're not getting too much insight here. Is this too high? Well, it was for this time frame here. Okay, and we see we traded into this liquidity, but there was not enough buyers in here that thought that this was a good value. So yeah, that means that if there's not enough buyers up here, then it's too high. And we look for sellers to drive it back down into an area where it's comfortable, a price level that is considered value, a value area. Okay, now look at this one up here. Okay, we did find some buying interest. We're back up here again. Okay, so and we just see it retest back up here, and we don't find any buyers. Okay, so now it exhausted here. The question though is, are we still finding buyers, or are we starting to find sellers? And that's the context that we want to understand here. Is it too high? Okay, well now look at the buyers come back again. So actually now we've hung out up here multiple times. And let's read the buyers and sellers in this auction here and trying to gain understanding, because actually I'm looking for buyers to trade into this level here. Okay, because we have, and here's why. Because look at the buying and selling in here, right? And we do see selling and we do see buying. Okay, and but we keep coming back up here, and then we see quite a bit of buying in these little areas in here. And there's no one really underneath here skewing the bid. No one's like willing to buy at a higher level up in here yet. Okay, that's not good for us to push through here. Okay, however, if there's still interest up in here without that, is bullish. All right, so buyers still seem to kind of climb and trade back up into these levels here. Now you can talk about also your this auction in here in terms of profile. Here's your P-shaped profile. A lot of transactions taking place up here. All right, so then are they willing though to trade up into this liquidity so far? And it has not occurred yet. Okay, let's read this auction right now currently. Are we finding buyers in here right at the current price, because it's kind of a high volume node here? No, we're not at the moment. Okay, there's a little bit. Okay, so a little bit more. Now look at the bid down here too. We haven't seen that before, right? So now we're curious here, looking for more up here at 67.5. And we're getting our answer right now. There's none. We didn't retest back up here. Instead, we found actually some sellers. Okay, so they were interested in this liquidity that we thought maybe it would skew the order book, and we'd find more buyers up in here. We didn't. Okay, so what does that tell us in the auction in here? Right, so we're back down to the bottom of this range in here, and we're finding these sellers trying to transact into this value previous point of control here. Okay, or this high volume node here at 66.5, or a quarter. Okay, so now we're starting to understand a bit more about what's happening up in this level up in here. And we actually haven't answered the question, is this too high? So that's the answer right now. Okay, now we're starting to unfold a bit more. A lot more is starting to happen here. Okay, but we don't know if this is too high right now, to be honest. Okay, now look at the buyers coming in now. Okay, that's good. Looking for a lot more right at this 60. This is a high volume node at 67.25. I want to see a big green dot in here. If I do, I would look for price to come up into these levels. Okay, I don't think that this is too high. In fact, maybe we'll get a breakout and explore and trade into a new area where it can transact and create a new value area. All right, so anyway, guys, like just starting to understand this auction process, and from based off of first principles, value and what prices or what the instrument is worth. And we're starting to evaluate that and starting to understand what traders think about these price levels here. Are they willing to transact at these levels? This is why you always hear about not just VWAP, but TWAP. Okay? It is the time that it accepted at a price level. That also is value. Right? So all of this based off of these first principles and market mechanics. Okay? And look at, we're still finding buyers climb back up here. So is it too high? No. It's not too high. All right, buyers, let's see it then. If it's not too high, then I want to see you transact here at 67.75. And then here's our P-shaped here, meaning that this top edge is weak, meaning weak that it can break. Okay, so we look for transactions up here. Now, it's this context again of liquidity that we really want to understand between liquidity, price structure, and the aggressors. Okay, and then we can look into the potential move in here. Now, this is why we always cover, especially like with the market pulse tool that we've been looking at. We start to cover the pulled liquidity, the pressure of the volume, etc. And if in these scenarios that we go through, we're looking for pulled liquidity up in here. We want to see them pull, and we want to see them add on the bid. And based off of that auction, we're looking for the aggressors to respond with a market buy order. So if that unfolds and we see the market buy order here, the big green dot, we are looking for price to go higher because we know there's appetite to buy and there's less liquidity here. So we are looking for the move higher. This can be extrapolated to all markets. Okay, look, we were just going over crypto earlier on. Here it is here. Transactions took place up into here. Market sell orders, trading it right back down into areas of high liquidity down here. Let's look at NVIDIA. Maybe not. Let's look at, because I'm looking at the absorption indicator in here. I wanted to do some testing on it. But look at this auction here in Apple. Same ideas in here. Look at the bid here. High liquidity. Sellers are transacting into these guys now. They're bidding up though through here. Okay, so there's a couple of questions in here then and scenarios to take a look at. Very, very simple. I don't see a lot of buyers up in here. I see exhaustion. And we see sellers just traded into this high liquidity that has been bidding up throughout here. Okay, so now I don't see other liquidity until really kind of down here at 189.35 or down here at 189.18 or so. So now sellers, if they come in with some selling pressure, they can very easily move the market back down. It's the opposite as well though. They're bidding up and they're getting filled in here. What if we get exhaustion on the sell side in here? Okay, now we're looking for buyers back up here. And if we get buyers back up in here around this 189.58 to 60 level, look out. This is going to go higher. All right? Any of those sellers in here will be flipped and have to cover on the move back up. Okay? So I'm not seeing sellers in here. I'm looking for buyers in here now. I saw this really strong bid, and I'm looking for buyers now to come in and lift it and break this price structure here to retest another price structure and high liquidity on the offer, the most being right here at 89.75. Okay, these are really simple ideas based off of these first principles that we're looking at in Bookmap in the order flow. All right, so let me see if there's any questions. And guys, so I see 19 likes in here, which is good. That's fine. I'm saying if you do like this kind of education, please hit the like button and let me know. We will cover more about these kinds of things, but we'll extrapolate it into all sorts of different trading. Okay, we'll talk about momentum trades. We'll talk about range bound trades. We'll talk about trap traders, etc. It's all based off of understanding the auction and the order behavior to gain insight to where price might be going next. All right. So anyway, yeah. Okay. All right. I'm getting some good feedback. Thank you guys. Yeah, now we'll get into also trading this as well, which is actually pretty simple. The trading is really simple based off of this. It's like, okay, well, where do we think price is going to go? Where do we think that buyers have taken control? Okay, and in this setup here, now this is not a trade recommendation. Okay, we won't do that in here. But you could be getting involved anywhere in here. You could be placing your stop pretty aggressively here or even at the swing here. And then you're looking for taking some profit back up into these levels here, okay, where that liquidity is, or front running that liquidity. Now, this is something where, talking about the trading part, okay, you first need to understand the auction process. You understand what you're looking for. This is why in that Bookmap Academy, we mark up our charts. We identify these elements in here. And then we start to parlay that into a trading strategy. Okay? So we know that buyers have the edge up in here. Okay? So we're looking for them now to kind of explore higher areas here. Right? And after looking at that many times over, then we're looking at a risk model around this potential opportunity. Okay? And looking for it to work out, or it doesn't. And if we look at enough of these and understand this auction enough and understand the player's behavior in here enough, yeah, we're going to have losses. No, that's a part of the business. But we have a higher potential of it working out if we understand some of these principles in here. Right. So this is where the trading plan comes next, with the understanding exactly what you're looking for and where exactly you're looking for price to go, and then wrapping your risk model around that, and then going through it again and again and again. All right. So and then continue to learn, continue to go into deeper understanding of trap traders or context. You can talk about other markets. You can use first principles for understanding market correlations. Like, this is Apple. Okay, Apple is like, it's in a downtrend here. Is it reversing? Right? Is it starting? Are we going to find a reversal here, or are we going to get trend continuation? All right. So we'll look for that here. But like, what I want to say is, like, what about Nvidia? Now, stocks are a little different, because let me take off the absorption here. Stocks are a little different because each stock is its own performer, and actually the auction is different in a stock as well. You have a float of shares out there, so it's very different. In fact, it's starkly different than futures. Okay, there can be unlimited contracts in futures. Right, so unless the company that has the stock here offers more shares, then that's something different. Okay, but in the futures market, there's open interest. Okay, new shares or new contracts are created all the time. All right, so anyway, yeah, we'll get more into understanding some of the trading behind this as well. But it's like I said, it's first understanding how these markets work, and then starting to get into looking for something higher probability, because you're basing your knowledge here off of exactly the mechanics behind these markets, first principles, and then looking for specific things that give us insight to where price might go next and what might be considered value. And then we're looking for taking advantage of that by understanding the behavior here of what we know moves the markets. All right, enough, guys. It's over my time, and we'll wrap up here. I just wanted to let you guys know again, if you are interested in Bookmap, we're having this opportunity right now. It's our Black Friday. That we get the question all the time: are there any deals going on? Well, there is now. That's why I want to cover it. November 23rd to the 28th. If you're a current subscriber, a current monthly subscriber, a free digital user, or brand new to Bookmap, you can get 3 months of Bookmap at half off. There's also another one over here. You can get 60% off, but this is for the first month only, and this is available to different group here. It is available to new people to Bookmap, free users, or previous Bookmap subscribers. So if you're a previous subscriber and you're back here checking out Bookmap, and you're interested in this, give it a shot for a month. Get 60% off, and you can partake in the Bookmap Academy and start to document some of the things that we're covering in here with the order flow, and then maybe this is something that starts to work for you. At least you gave it a try, right? All right, guys. So anyway, we'll wrap it up. Thanks everyone for coming. Enjoy the weekend. It's we had our holiday yesterday. The markets will be closed in, I think, in another hour and a half, or no, 2 hours. So not looking for much, today. So I took the time to go over this market mechanics here in more detail for you guys. Okay, thanks again, guys, and we'll see you on Monday. All right, take care. Have a good weekend.